The query is on Power Grid. We have Kannan P, who has written to us from Chennai. He holds 500 shares of Power Grid at 200 rupees. He bought it about 2 months ago. He's a medium-term investor and wants to know what he should do. Well, for now, he's making quite a bit of a loss, actually. Rajat, you think there's any reason for him to remain invested, or should he just bite the bullet and perhaps put this money to work elsewhere?
I quite agree with you. I mean, agree with the last part of your query, that is, or rather the statement that you made, that it's better to actually bite the bullet and switch to something else. If you look at the monthly chart, you will find that there is an evening star-like formation. That means this is basically a three candle pattern, in which the first candle is a bullish candle, in which the stock moved up from something like 190 to about 210. Then in the succeeding month, that is in the month of May, 216 and 201 low. And last month, that is June, it fell from a high of 207 to 183. So this shows that the sentiment has totally changed, and it is, on the daily chart, it is showing a strong downtrend. So it would be better to actually exit this stock and switch to something else and do not stay invested. And I, for one, am suggesting my clients as well as people that any weak stock that you are holding, unless you have the guts to hold it for a very long period of time, exit, hold money. Maybe at a later date you will get much better opportunities at much more attractive prices.
All right, Rajat, point well taken. With that, let's move on to the next one. Vikas Kaushik writes to us from Kolkata, holds 3,000 shares of Amtech Auto at 21 rupees for the last 1 year. Long-term investor wants to know whether to hold or sell. Well, Vijay, it's again one of those high debt companies, part of the IBC as well. People were thinking, you know, there would be resolutions, but the big question was, will equity shareholders get anything? If you take a look at all of these stocks, they're down anywhere between 30, 40, some even 80% from the start of this year. Do you think it makes sense to hold something like an Amtech Auto at 21 rupees, losing some money here? And perhaps again, like Sumaira said earlier, bite the bullet and put the money somewhere else?
Well, few points here. One, I am very wary of debt-ridden balance sheets, and I really don't see how this debt would be serviced, because market situation also for kind of mid-cap companies is very challenging. Amtech Auto was in a good spot few years back, but the kind of acquisitions they did, and they hived off a business. I think Wendy's has bought back the stake they had. But again, the debt is too large to handle as of now, and any resolution would take time, and turnaround would take time. Although there is a very bleak chance that the company comes back very strongly and we see 21, 22, maybe 25 odd levels, but that is an if I can say so. So rather than staying here and hanging on a rope of hope, I would say that it's better to get into some other stock and try and revive the portfolio. Maybe a pharma company could be a good option, and and there are chances of the money coming back. But I think that this rope of hope can disappoint also. So I would say exit on Rallies and get into some other story which has the potential of paying back.